Hey guys, Justin Picker back with you for another video. Just wanted to have a quick chat about guarantor loans. Guarantor loans are, look, probably the eighth wonder of the world if you've got it available to you. So guarantor loan basically is your parents or relative will actually provide the deposit or the guarantee in order for you to get into your first, usually principal place of residence, but there are some lenders there that will allow you to go in for your first investment property as well. So some general rule of thumb, it's pretty much for your first only property. Most banks, once you've kind of got an investment property, most of them will say you've already got a property, we're not going to give you the guarantor. So think of it as kind of your first step into the market. So really on that side, if it's your first property, that's great. But also you need to be able to service the loan. So if you're getting something for $1 million and the guarantee is 200,000, the bank is still giving you a loan of $1 million. So you need to be able to afford the serviceability on that loan. So your parents are just providing the security, you're providing the serviceability. So they're looking at your pay slips, your income, etc. It's just your parents are obviously giving you that security. So guarantor, what is it? Basically, yeah, it's a 20% deposit that, or 20% security, I should say, that your parents or relative would give you in order to get into the market. So if you're looking at, say, a $500,000 house, 20% of that is $100,000. So how it basically works is if your parents have got a place, that's worth $1 million and they only owe, $200,000 on it, there's plenty of equity in their property that they could use to help you move forward. So what it basically does is the guarantor amount will cover your 20% deposit essentially, and the banks will take that as the security. So you can essentially get into your property with basically no deposit. Some lenders will even allow you to even put the stamp duty on top of that as well, and some of your closing costs too. So having guarantor on your side can essentially allow you to get into a property with no deposit, little to no deposit, and avoid things like your lender's mortgage insurance. And if you needed to roll your stamp duty into the loan, you could certainly look at doing that. So if we look as an example of something worth 500,000, you're obviously getting the guarantee there of $100,000, that 20% security from your parents. If the lender allows you to go to 105%, you could pretty much add another another $10,000, $20,000 on top of that to obviously help you move forward. So really an effective way to get into the market. Now, obviously it's a big conversation to have with your parents, because if you were to default on that loan or anything like that, the bank can come after your parents or that amount of security, and you really don't want to do that to your parents. So you really want to make sure that you're covering all your bases. But if you're working full time, you've got a good income, got a good job, maybe it's yourself or your wife or partner, things are looking quite solid, but you're just struggling to kind of get a 20% deposit, which can be quite a lot in some instances. Having a guarantor on your side is really, really good. So we do guarantor loans quite regularly. As I said, they're one of my favorites, because you can really, it's really the key thing about leverage is using other people's and the bank's money to kind of get yourself into the market and have that asset work for you, whether you want to live in it or have it as investment. So if you have any questions, you want to get the ball rolling on guarantor, feel free to give us a call. We'd love to help you out, and we'll chat soon. Cheers.